Hi everybody, welcome to another recruitment tip, and in this video I'm going to break down what CPI is, why it matters, and what are the latest inflation numbers meaning for Australia right now. When I first stepped into recruitment in the corporate world, I had no idea what CPI was and wanted someone to explain, so here's my video for those who want to know CPI. So CPI stands for Consumer Price Index. It's released by Australian Bureau of Statistics and tracks how prices are changing for the stuff Aussie households actually buy, like food, housing, transport, healthcare, and recreation, and everything else that you spend. It's basically a basket of goods and services, each weighed on how much we spend on them. And it's the main way that we measure inflation, and that's how fast prices are rising. So why is it all so important? Because CPI tells us how far our money goes. If it jumps, your dollar buys less. That $100 grocery run that you did last year is now only worth around $92 worth of stuff. It also matters for interest rates. So the Reserve Bank uses inflation data to decide whether to rise or cut rates. High CPI, they'll likely hold or hike. Low CPI, there's more room to ease. And wages, pensions, businesses, all the decisions often move in line with CPI, so it affects almost everyone. So now you know CPI and what it means. What is happening right now? Inflation surged in September quarter. Prices rose 1.3% just in the quarter and 3.2% over the year. That's a sharp increase from 2.1% in June. That's a much hotter result than economists were expecting, and it's effectively killed off any chances of a rate cut next week. The biggest driver, electricity. Prices jumped 9% in the quarter and a massive 23.6% over the year. So what does this all mean? For households, the cost of living squeeze is still real. Electricity and essentials are driving prices higher again. For borrowers, this all but rules out a November rate cut. The RBA is likely to hold steady. They'll want to see inflation trending lower before moving. For savers, the news is mixed. Your cash is losing value faster than you're likely earning interest, unless returns are above 3%. And for businesses, costs remain unpredictable, but economists say this spike should be temporary as power rebates stabilize and wage growth cool. Most experts don't expect a panic or a knee-jerk rate hike, just a longer wait before any cuts arrive, probably not until sometime next year. In short, inflation came in hotter than expected, mainly driven by energy prices. It's a setback for rate cut hopes, but it's not a crisis. The RBA is likely to hold steady, keep pressure on inflation, and wait for signs that the economy's cooling before it makes its next move. Prices are still rising, but the good news is most analysts think that this burst will fade over the next year. I hope this helps and give you more insights to what actually CPI is and what's going on in Australia right now. If you want any more information, if you want any tips, advice, please feel free to reach out, and I will be sharing another one with you next week. Thanks.